is Savji Chatterjee and Rohan Singh. Welcome to our weekly Chartsarefun session. This is on January 5th, Sunday. Took a break for 2 weeks, was on vacation. Market has absolutely had a great year in 2024. Over 20 to 23% gains in S&P. NASDAQ did even better. And two back-to-back years, 23, 24 were both great years. And the question here is, would it be a hat trick? Would we get another solid 2025? Market participants, or call it the analysts, are expecting an average S&P target of 6,700 for 2025. And that's almost about 14% increase from somewhere around 5,900 where we are on right now. Well, 14% is also the expected earnings growth, EPS growth in S&P 500 for 2025. So that kind of keeps it at about the same, P by E. If you look at price is going to appreciate 14% and earnings is going to grow 14%. Guess about the flat market is with respect to P by E, S&P is at 25, almost 20% above the average kind of P by E for S&P over the last 15 or 20 years. That's somewhere around 19 to 20. So at 25, it's significantly higher than where the market's average P by E ratio is. So it's stretched. But there is euphoria. There is expectation of the second term of President Trump causing a lot of pro-growth. This is going to be continued, leverage in taxes. He's going to be very pro-tax, kind of keep the tax low. He's also going to start bringing down the corporate taxes down from 22% down to 15. So market's very bullish. Market thinks that it's going to be a great year ahead. So let's look through some of the key charts. We will start off with S&P 500, the key barometer for the US markets, the large cap top 500 stocks. Look at some of the momentum indicators like summation index, look at some sentiment such as the investment manager sentiment. We'll look at the call put ratio or put call ratio for CBOE Equity Put call ratio. We'll look at what that's showing us. And then we will look at small caps. The key ETF for small cap is IWM. So we'll look at that. We'll look at the Magnificent Seven that we know has powered a lot of the gains in 2024. We'll see where that is headed near term. The key ETF for that by Round Hill is the company that manages that ETF. It's called MAGS, M-A-G-S. So we'll look at that chart. We'll look at semiconductors, which we know have been extremely strong in 2024. It just broke out of a pennant shape in the daily chart or the hourly chart higher. So we'll see where MAG 7 goes, the MAGS, as well as where the semiconductor ETF SMH goes. A core driver of the semiconductor bullish move is NVDA, which is also the second largest Magnificent Seven stock. The largest is Apple. The second largest is NVIDIA. We look at NVIDIA's chart. And then two emerging markets. We know that India is expected to be very bullish. Many expect India to do very well. So we look at the India's index, their benchmark index called Nifty, their top 50 stocks. We look at Nifty. It's a very diversified index, the Nifty index. And then we look at the Chinese market. Their core ETF is called FXI. We look at that. And then finally end with cryptos. We know that cryptos have been on a tear since President Trump won his re-election in November. Bitcoin has climbed a lot. We know that post-halving, Bitcoin tends to have a very bullish trend. We'll see the last couple of post-halving trends. Every 4 years, we have a halving event, and then the crypto goes on a huge bull run. So we'll see where the monthly chart of Bitcoin is telling us as the target it might be headed in the next few months. So with that, let me share my charts and start looking at the markets. So our blog site is at Substack, chartsarefun.substack.com. We appreciate you subscribing to this. We tend to publish daily blogs in the mornings. You'll get an email as soon as the blog's published. If you just share your email, it's free of charge. You can get access to our blogs. The YouTube channel, so as I said, took a break for 2 weeks. Was on vacation back. So this is the Charts Are Fun. It's also called at Charts Are Fun in YouTube. Appreciate if you subscribe to the channel, and then if you like the videos, if you could hit the like button. So as I said, I'm going to start off with the S&P 500. Let's look at the daily chart. We see a picture perfect double bottom pattern. Why do we see a picture perfect double bottom? Well, it as in S&P 500 after the FOMC decision on December 18th. Market didn't like the kind of hawkishness that Chair Powell indicated. He kind of reduced the rate cut expectations for 2025 to only 2 cuts, 225 basis point cuts. He also said he's going to be very data dependent. He is getting a bit worried about the market heating up, in particular inflation, not fully controlled. His target for inflation CPI is 2%. It's been kind of flattish, not going down any further. So it's a concern for him. And the labor market seems to be reasonably doing well. So that's also something that he's got no rush to cut rates any further. So with that, the market did pull back. We didn't quite get the Santa rally as we typically get. We got a couple of days kind of pre-Christmas into post-Christmas. But then after that, the last few days of the year, the last, in fact, 3 days of the year, the market came right back down and then started off with a retest of that bottom for S&P around 58.30 on the first day of the year, which is January 2nd. So this is a classic retest of the double bottom, 58.32 and then 58.30.29. However, as it tested the bottom the second time, we see positive divergence here. RSI at a higher low, and so is the MACD histogram at a higher low. So this indicates potentially a W-shaped double bottom. So the W-shaped double bottom in this case could take us back to the from where the W started near 6,100, 6,099, pull back to 58.32, 60.49, 58.29. So we expect S&P to take out its 50-day moving average, which is around 59.44. We can see here the blue line. The S&P closed right below it at 59.42. It did kind of intraday on Friday break above that, 59.49, but closed right below it. So we expect continued upside with the positive divergence, indicating that S&P likely goes higher, and it would effectively make a run once it takes out the the 60.49 level for the W and starts going higher. We could expect it to kind of make a run towards 6,200. Now, why are we so confident about a potential rebound in the S&P 500? Let's look at the market breadth indicator, which is the summation index. And that, as we can see, if we look at the last full year, entire year of 2024, it maintained in the positive range. It typically goes from 1100 on the top to minus 1100, minus 1000 to 1100 on the bottom. It did touch 1100 towards the late September, early October. Since then, market breadth has been deteriorating. And we can see that with the small caps. Small caps have actually pulled back quite a bit over the month of November and into December. But this overall says that while the Magnificent Seven has been doing well, S&P has been climbing because of the mega cap stocks, the $1 trillion club stocks. Of course, Broadcom has been one of the core NASDAQ 100 leaders, doing very well. But the other classic Magnificent Seven stocks have done extremely well, and that has kind of kept the market coasting higher highs. But overall, from a market breadth indicator, it topped out on early October at 1100, and it dipped to minus 385. It just turned higher. You have to just kind of eyeball it down here. It just turned higher. This typically is an intermediate term cycle indicator. When it is going to be start moving up again, there's a potential chance for the next several weeks we could see some upside. So expecting a reasonably good January. Yes, we didn't quite get the Santa rally, but we could effectively get the January effect, as they call it. Market makers, money moves in the month of January out, with bonus payments, with 401k investments, and so on. So a lot of money gets invested in January. So there is liquidity and money coming into the markets, and also, market money managers sell losers in the month of December to clean up their books, take tax losses, and then they start buying up stocks again in January. So there is expected bullish move in the January effect, and in particular, market breadth indicator from the summation index, this is the NYSI summation index, kind of is turning up lower. It tests the lows of the entire year in terms of negative 385, and potentially an upside move here could give upside in the market. Sentiment-wise, the investment manager sentiment, NAAIM, it also shows kind of a recent pullback. It was at extreme optimism around 99 before the FOMC meeting on December 18th. Since then, it has steadily come lower, and now from 99, it has come down to 64. The lowest it had touched in 2024 around August. Remember the Japanese market crash on August 5th. Towards mid-August, it had come down to 56. So it is also pulled back, which means sentiment from money managers is also not extreme bullish, which is good, which means there is potential for additional rise in the market. The only concern is the CBOE put call ratio. This is for the equity put call ratio. That cycles, and this is a 20-year chart, cycles between anywhere from the 0.54 or 0.5 level to somewhere around the 0.8. So we've drawn two horizontal lines here at 0.54 and 0.8. If you notice, every time it kind of tests that level, then it starts coasting higher towards the 0.8. Sometimes it exceeds 0.8, but then very quickly pulls back. And it has been doing that over the last 20 years. So now, as you can see, last we had seen that 0.5 level was in 2023 and then in 2022. So we are around that level. So complacency is high with respect to put call ratio. And at some point, perhaps in 2025, once we achieve new highs for the market, once S&P completes its double bottom pattern with a test towards 62, 6,300, I wouldn't be surprised if we get a 10 to 15% pullback with the timing of this CBOE put call ratio moving from 0.54 back towards the 0.8. So this is in many ways a market cycle indicator. Right now, complacency is extremely high. I would be cautious in chasing stocks here. If you do hold portfolios with strong stocks, play the upside for the next couple of weeks and so on, or next month or so. But then going into February and March, seasonally is a weak period. I wouldn't be surprised to see this put call ratio jump back up towards the 0.8, followed with a market correction of 10 to 15%. That's what my projections are at this point, looking at this particular indicator. Now, I said I'm going to look at small caps. In this particular case, we look at IWM, which is the small cap ETF for Russell 2000. It has been cycling from the 2023 low at 159 to 244 that it recently printed towards late November along an ascending channel. So as you can see, it tests the low end of the channel, goes back to the top, low end of the channel, and so on. The recent test of 244, the top end of the channel, happened towards late November with the euphoria and the optimism after President Trump won his re-election. And then we got a reasonably good pullback in the month of December. Didn't quite reach the bottom end of the channel, but then this week it closed with a bullish looking candle. We can see that we had a 0.92% gain for the IWM for the first week of January, but then it tested the rising 20-week moving average in red. And from there, it is now potentially set for another climb. And I wouldn't be surprised for it to see it take out the 244 high and move above as we draw the top end of the trend line, which is now at a higher high from 244 towards the 250 to 260 level. I wouldn't be surprised to see IWM in the next few weeks make a climb back to 250, 260. There is a pattern on IWM that I have previously shared between 195 and 227 ascending triangle that actually measures somewhere around closer towards 259, 260. So I wouldn't be surprised to see IWM to rebound here and kind of go start testing the top end of the channel, top trend line of the channel near 260. Now I said I'm going to look at the chart of Magnificent 7 ETF, which is the round hill big tech Magnificent 7 ETF called MAGS, MAGS. This is a beautiful cup and handle, 49.57 on the left end of the cup. The bottom of the cup is at 38.2, 49.59 at the right brim of the cup, at almost the same level as the left brim. A very shallow handle and then a breakout. That measured target is almost closer towards 61. So I wouldn't be surprised. We did get a pullback in MAGS in the last few days. This is a daily chart. And then we got 2.55%, pretty strong move on Friday. This could be kind of a reversal and then a move back higher, breaking 58 to move towards 61. So key is to see how the or Magnificent 7 stock setup. In particular, NVIDIA could be a leader. So for NVIDIA, we can start first looking at the semiconductor ETF, the VanEck Vector Semiconductor ETF called SMH. In the hourly chart, which is, you see your 60-minute chart, it had formed a beautiful pennant shape, lower highs and higher lows. That pennant it broke out of in the on Friday. And after that breakout, we expect this to be a bit of a cup and handle, 241 to 252, a little bit of a shallow handle maybe on Monday, tomorrow and Tuesday, and then a breakout of that. So that's an 11-point move to 252, takes it to 263. I think that's a very good possibility. We can see here that the 20 period moving average is bullishly crossing over the 50. The 50 is climbing, the 20 is climbing. I see upside in semiconductors, and that would be led by NVIDIA. Analysts, if you remember, in December had gone very bearish on NVIDIA, thinking that, oh, it had kind of topped out. People were painting a head and shoulder with a neckline around 132. 144 was the left shoulder, 132 to the head at 153, down to 132, 31.79 up to 146, and a break below. That measure target was closer to 110. Well, that head and shoulder didn't quite pan out. It did pull back, did break below the neckline at 132 and went towards 128, but then quickly rebounded from that, and since then has been coasting higher. If any, this is actually, from a bullish perspective, an ascending triangle pattern on NVIDIA. Around the 140 level is the resistance line. The higher lows give you the ascending triangle pattern. So taking a ascending triangle measurement from 90 to 139, that's closer towards $49. Add that to 139, you're getting closer towards the 188. So that's a measured target on NVIDIA at 188. It closed at 144. If it can take out 152.88 from late November, I wouldn't be surprised to see make it a run towards 188. And if NVIDIA goes to 188, you can expect the semiconductor holders to do very well, to continue to climb. Of course, NASDAQ 100 QQQ is going to do very well, and so will the Magnificent 7 ETF MAGS resume, kind of get its climb at almost 10% from 55.5 towards the 61 level. I said I'm going to talk a little bit about the emerging markets. The India benchmark index Nifty 50, that is also got a beautiful double bottom, a very similar double bottom as I showed on S&P. The only difference being S&P's double bottom happened, the first bottom happened towards December 18th after the FOMC decision, and the second bottom just happened the first trading day in January 2nd. For India, it was the first bottom happened around 23.3K in the Nifty index around third week of November. From there, moved up to 24.9, forming the W, pulled back to 23.5, bottomed out on the last day of December, last trading day of December. And from there, it's been climbing. I expect this W-shaped bottom double with a positive divergence here in higher lows in RSI and MACD to take it towards taking out 26.3 and moving it to a slightly higher high, measuring from 23.3 to 24.9. That's roughly 1,600, 1.6K. Add 1.6K to 24.9, you get 26.5K. So that's where my measured target on Nifty is in the next few weeks. So I'm pretty bullish on India doing well in the next few weeks. And then also bullish on the Chinese iShares large cap ETF, FXI. It potentially has a beautiful inverse head and shoulder. We can see the left shoulder here. So neckline around the 33 level, left shoulder at 30.2, back at the 33, head near 29, 28.93, back at 33, a beautiful double bottom kind of right shoulder. It had pulled back to 30 at the same level of the left shoulder at 30, went up to 31.35, pulled back and retested that bottom at 30 at 29.87. PPO is at not at the lower low, but maintaining a reasonably flat line here as PPO and RSI start climbing back towards the 70. I wouldn't be surprised to see FXI break out of an inverse head and shoulder and head towards a measured target. So if you measure target from 28.93 to 33.25, add that difference up to 33.25, you get somewhere around 37.5, 37.57. So with FXI moving higher, we can expect the internet giants, the Baidu, Alibaba, JD, and the PDD, the company that is the parent of Temu, to do very well. So I expect a reasonably decent upswing in the Chinese market and in the Indian market in the next few weeks. Finally, I'm going to talk about Bitcoin because, as we had said, it had a classic move in the last couple of halving events in 2016 and then in 2020. We can see consecutive, this is a monthly chart. So here you can see that consecutive months of climb, every candle is a month after the halving in 2016. A very nice parabolic move. In a similar way, this is a kind of a cup, a handle, and then a breakout and a move. A similar kind of a cup in the 2018-19 timeframe. The halving happened in 2020 and then a breakout higher and a kind of consecutive months of climb. We just formed a beautiful cup and handle. So the cup is on the left rim at 69,000, 15.5 was the low around late 2022, went up to 73.8. So that's the cup. So 15.5 to 73.8, you're talking about roughly 58.3. 58.3 added to 73.8 measures to 132.1 or 132,100. That's the target on Bitcoin. And we just tested 108 in December, pullback slightly, pullback in terms of a candle from the month of November to December. It kind of closed at a doji candle, but I expect that to be just a false signal, and I expect a continued break higher. I expect Bitcoin to break out over 108 maybe next week or very soon as the inauguration happens for a very pro-crypto President Trump taking the office on January 20th. So I expect a bullish move in Bitcoin in the next few weeks. So a good way to play it is through the ETFs, GBTC, FBTC, and so on. And then if you're interested in the miners, Mara, right? And of course, the poster child of Bitcoin these days is the MicroStrategy play. It's a very leveraged play, extremely volatile, but has been moving incredibly well. I would expect to see continued upside in MicroStrategy, Coinbase, Coin, and others as crypto continues breaks up. Right now, it's about 97,000. It trades 24/7. So even though we're recording on a Sunday, we can see the ticker here changing because it trades all the time. It's at 97,721 right now, but I expect it to break above 100 and make, in fact, break above the December highs of 108 and make a run towards 132. So maybe not by January, but in the next month or two, I would expect 132 to be achieved in the Bitcoin near-term target. With that, good luck investing. Wish everyone a great 2025, the best of gains on your portfolio, and we'll be back next week. Thank you so much for listening.